what's happening is over the last 10 years, 15 years, consumer behavior has also changed. So a lot of the consumers have become global. So an example is travel industry, right? Or Airbnb, right? It's not just like, hey, I wanted to go for a weekend, weekend trip to upstate New York or to Lake Tahoe. Like we now go to Paris and can have an option of staying in Airbnb. So generally, the global markets have completely expanded. Number two is that the consumer behavior has changed, so the markets have become much larger, and so VC funds and PE funds are catering to that by doing this massive rounds, and technology and data is enabling these companies to reach the consumer like they've never done before. And so I think they are playing that very important role. And so again, our belief is that how do you make those type of investments available? So I'll give you two examples on Yieldstreet. We offered Stepstone, which is a publicly traded investment firm. Greenspring Associates were acquired by Stepstone, and we offer their funds. Greenspring has a 20-year track record. They are a fund of fund managers primarily. So what they do is they invest in other venture capital funds. They also make direct investments, but they invest in other venture capital funds. And so they invest their LPs in Andreessen and NEA and Bessemer and like really top tier VCs. Now, if you want to invest in them, the minimums would be very high on private wealth platform if they are available at all. So now you can invest on Yieldstreet at $25,000 or $40,000 minimums, which is obviously is incredible. The other aspect is that what other flavors of VC investment can you offer? So secondaries is another big thing. So secondary sales. So for example, if the company, as we spoke about earlier, stays private long, early investors and employees and management might want some liquidity after 5, 6, 7 years at the company. So that's when secondary sales come into picture. And secondaries fund is another way to access some of these high growth companies where you're not taking early stage venture risk, which obviously exists quite a bit because it's not a proven company yet, but later stage growth company risk where now the company is already proven, and so now it's on a path to go IPO. It has real revenues, profitability in some cases, and so how do you tap into that? And then the third strategy is kind of pre-IPO allocation, right? And so co-investment. And so you can take a specific company that is on a pre-IPO path and make that available where you could put small checks. So for example, we have Fetch Rewards that is on the platform, and that company was funded in their last round by SoftBank, and really great investors all around. We are actually announcing another very exciting company in the next couple of weeks. And so usually you will not get access to those type of rounds on your own if you want to put small checks. And so I think that really can kind of gives people access to that venture ecosystem that they didn't have before.